I ran across an interesting interview the other day with Kevin O'Leary. It was a recent interview. Kevin O'Leary, for those of you who don't know, he was on the Shark Tank. He's a successful entrepreneur who helps finance other people's businesses. And generally these folks with a lot of business experience, knowledge of how the economy works, are worth listening to. And I think this interview was fascinating.
We're looking at a downsized America. I tell it like it is. Let's talk about housing. Just 3 years ago, even 24 months ago, you get a mortgage at 4.5%. You're lucky to get one at 8% today. So that means the size of the house you're going to buy is 20 to 25% smaller. That's a downsize. You want to borrow for a car? Sorry, that's 8 to 9%. Used to be 5%. So smaller, less expensive car. That's happening at the same time. And also, you really have to think about where you work. If you're going to spend a lot of money driving, you're going to pay a fortune in gasoline because that's moving back up. Looks like we're on our way back up to oil between $90 and $100. These are all political issues, but the truth is, if you take interest rates up in this unprecedented, from basically nothing to 5%, 5.5% now, and on its way likely to 6%, which means the lending rate's more like 9%, it's going to hurt somewhere, and it means your lifestyle, if you're in your early 20s, is going to be about 20% less. Sorry to tell you the truth, but that's what I do all day long, and that's the way it is.
Basically, what Kevin O'Leary is saying in this interview is that people in their 20s are going to have 20% less. People in general are going to have less going into the future, and it fits a rather interesting narrative that we've all heard in recent years. And maybe if this trend continues, people will have even less and less and less and less. And the reason why people will have less, the factors in our current economy that make this to be true, essentially, is that, if you look at interest rates, for example, interest rates have gone up dramatically over the last couple of years. And they did that because they pumped so much money into the economy, they had to keep the value of the dollar up and keep things from falling apart. So they just pumped up interest rates to try and slow inflation. Inflation would be the value of the dollar dropping to the point where the cost of things become unaffordable for most Americans.
And all of a sudden, people are looking at the cost of energy, protein, car loans, mortgages. And these are complicated situations because of the rate hikes that happen so quickly. But there's no question, inflation is not going down. It's north of 3.5%. The Fed may have to increase rates another 25 or 50 basis points as early as January, February. It will be a very hot political potato, and it's going to become an issue because it hits you every day at the pump. It hits you every day at the grocery store.
And even with the rise of interest rates, right, we've still seen inflation at nearly double the Fed's target, and that double is more than what the Fed's target was in the past of about 1.5%. We've now raised that target to 2%. We, meaning the Feds, the U.S. I often use we incorrectly on this because it's not the way I would do it. But the Feds have raised the interest rate target, the inflation rate target to 2% from 1.5%. And we're still hovering just under 4% inflation. They say 3%, but it's more like 3.7. It's rarely under 3.5% on the year-over-year mark that we see on a monthly basis. So the point is that you've got this inflation. The cost of things has continued to go up. The cost of things today, they've gone up so much in the last couple years that the reality of somebody being able to afford something that their parents currently have. I have a daughter in her 20s. The reality of her being able to walk out and buy a farm, buy land, buy a house, is going to cost her a substantial amount more money than it cost us just even 10 years ago. We bought our property 10 years ago, paying half the price per acre, less than half, than what that same land goes for today. Right, so that's a significant thing to consider. And then just with things like lumber, the costs of construction, those are the things that will always keep prices elevated regardless of supply and demand. If the cost of the materials are a certain amount, then that means that the new homes, the new things are going to cost a certain amount of money, and that elevates or keeps elevated the cost of older homes, older properties. Even within a crash, what you'd probably see is new homes just stop being built and the market kind of suck up the inventory that's out there until there's a correction back, but it won't change again that the cycle repeats, and we're eventually going to build new homes. Those new homes will help dictate the market. And that's just one example. You know, fuel is another thing. We used to get excited when we saw fuel for, you know, around $1 a gallon. Now we get excited when we see it under $3, right? It's a super good day. You know, all of these things transpire. Meat is another one. You know, I've had somebody commented the other day that there was a YouTuber who proved that our current beef shortage is the same as it was in 2014. And you know, he's not completely wrong on some of those points. You know, he was referencing calf herd sizes, calf meaning yearlings of cattle across the United States in 2014, being very similar in 1952. The current numbers that you hear a lot of people talking about are the cow herd. The cow herd is the lowest it's been since the 1960s. And why that's significant is because calves come from cows, right? So there is a significant meat shortage in the United States. The only reason why we've been able to offset that is because we've imported a record amount of beef this year. 3.8 or 3.9 billion pounds of beef were imported into the United States this year because the dollar is so high, because we've raised interest rates. Sorry, the Fed has raised interest rates, you know, to the point of increasing the dollar against everybody else's dollar. But if you look across the world, while food prices have kind of leveled off a bit, they're still extremely high, and as their dollar has gone down against ours, their cost has continued to go higher. So I don't think, you know, when we look at inflation, it's not just a supply and demand thing. There are so many different factors that can go into why prices are high, and they're going to remain high. And the interest rate is also going to remain high because inflation is not going to be that easy to get under control. So what he's saying about kids having less is absolutely correct, because now they're going to have to pay more, and they're going to have to pay at a higher interest rate, which means that they're going to have to buy less.
When you look at the inputs going in with any industry, I guess you can look at it the same way. The inputs that are going in there are getting so high. Do you think that that'll actually cut back on supply and push prices even higher going into the next couple of years? Or do you think that?
Yeah, I mean, obviously, to the extent that there is less produced, then that puts even more pressure on supply. And I think the market will find an equilibrium between, you know, the costs that, you know, what you pay to grow the crops and what you can sell them for. But obviously, as the supply is going down, it's going to have to be made up with higher prices, right? So, you know, farmers will sell less stuff, but they'll get a lot more money for what they sell. But I also think that the exports could actually pick up quite a bit. So if the dollar really falls, which is what I expect will happen, a lot more of what U.S. farmers produce will end up being sold abroad. So maybe Americans won't be able to afford the higher prices, but foreigners will. And so a lot of what we end up producing, a lot more of what we produce, will end up being consumed in other countries, because as the dollar really loses value, other currencies are gaining value. And so foreigners will be able to use their appreciated currency to outbid Americans for a lot of products. So, you know, where you won't see as big an increase will be in services, because services, you know, or at least the services that can't be exported, let's say like a haircut. You know, the barber can't charge you more money because somebody in Japan is willing to pay higher price for a haircut, because there's no way that he can export that haircut to Japan. And there's not that many Japanese who are going to come take a vacation over here and then come get a haircut. You know, it's very expensive to come over here. So in that respect, the barber has a hard time passing on, you know, his higher cost of living in a haircut. But the farmer, you know, who could, you know, sell his crops and have them exported to Asia or South America or Europe, I mean, you'll have a lot easier time, you know, passing on those higher costs when you have the whole world as a potential market.
right? They can't afford the 3,000 square foot home in the suburbs. They're gonna have to go to the 1,800 or the 1,000 square foot townhome. Whatever it is, they're gonna have to downsize what it is that they get. Look at cars. You know, if several years ago you could buy a full-size SUV for a reasonable amount of money. Nowadays, it's gonna cost you more than, you know, a house would. It's going to cost you over $100,000 for a full-size SUV. Believe me, I was just in the market for a full-size SUV. I never buy new, though. We always buy used. And, you know, we've been fortunate enough to always find a decent deal. But just, you know, I've always bought the same car over and over again. It's usually 10 years apart, right? Because I drive my cars until they literally fall apart. And that's after replacing motors and other things. But, you know, just 10 years apart, the cost, the base cost for the same car, the same types of options, with around the same mileage, has cost me $10,000 more every 10 years, or more than that. It's a substantial difference. It adds up. So I do believe what Kevin O'Leary is saying is true. These kids, these 20-year-olds, are going to have less. And I think, you know, if things don't change, their younger siblings or the next generation is going to have even less than them. Because you just can't, you know, the wage growth isn't keeping up with the inflation and the interest rates. Maybe it's on purpose. But this is something that makes me think, you know, what's going to happen in the near future? I mean, look at how many times they've raised interest rates just within the past year, right? There's an industry that I think would be heavily impacted by this, which could affect your ability to eat. You might have to eat less starting next year. And of course, with the dollar being high, we're still going to be able to buy a lot of things from other countries. But the second the dollar starts to falter, which it will, right? The second they stop raising rates, the dollar is going to start to falter, because when you compare the US economy to other economies around the world, all the factors that blend into what values a currency, the US currency is really kind of in trouble. I mean, Moody's just downgraded the US debt. So I mean, there's a lot of issues that we have, a lot of issues that could lead to a fall in currency value, which would just, you know, cause even more inflation for us. But that's a whole other thing. So my point is this other industry recycles its debt yearly. Okay, so this industry, the people borrow operational loans, they make interest-only payments on those loans, and then once a year, they repay the loans just to borrow the loans again. This industry is the agricultural industry. And it's very similar. I used to work in the commercial real estate industry where we had to refinance every 7 years. And I remember after the 2008 financial crisis, it became literally impossible to refinance properties that we had bought before. There was a property I was involved with, we bought a week before Lehman Brothers crashed. And it was literally impossible to refinance that property after the changes in rules and regulations. But this is kind of similar to that, only it happens on a yearly basis. And what's going to happen is these farmers and ranches that recycle this debt on a yearly basis, generally crop farmers do this, they're going to have, and those who run feeder cattle, right? Because they're borrowing, they're paying the interest payments throughout the year, and then they cash in when they, you know, sell their herd or they sell their crops. They repay the loan and then they borrow another operational loan. But if the interest rates have gone up several times over the past couple of years, so these farmers are going to be paying nearly double the interest that they were a couple of years ago, suddenly you have choices that have to be made, because the agricultural industry is one that operates off of very low margins, right? We've gotten very, very big farms. A similar thing happened back in the 80s when interest rates went up to 17, 18, 19%, right? But the farms were a lot smaller, so it was a lot easier to manage that debt. Today, you know, the farms have gotten bigger and bigger and bigger. And although there are a lot of homesteaders out there and small farms that have been popping up over the last couple of years, which we highly encourage and would love to see more of, the reality is that most of our food is grown through these massive farms. And there's not necessarily anything wrong with big ag. There's some very bad companies, but there are also some very good companies. We try to do a lot on this channel with sharing you guys the good side of agriculture. But these large operations operate off of very small margins. It's quantity that keeps them going. And so suddenly you have these interest rates go up. So starting next year, when these people go in for loans, they're going to have to borrow less money. Well, what can they cut back on, right? A lot of them have already cut back on fertilizer over the last couple of years because fertilizer prices have gone through the roof, right? A lot of the input costs, just like inflation, have also gone up on these farmers. But now their financing costs have gone up. Their monthly payment that they have to make, and if they don't make it, then the bank or the federal government, whoever funded them, will have to come in and take their farm. So it poses an interesting question, because where can these guys cut back? Where can they cut back and still not have the quantity that they need to meet those low margins? Where are they going to get the extra money to be able to pay these high interest loans? Because they are high interest compared to what a lot of them are used to. And this is a question that's come up with the Farm Bill in recent weeks. And it's a question that I think is on the minds of a lot of agricultural producers who rely on these types of funding programs to provide you with food every year. And it's a question that you should be asking yourself. What is going to happen? What is going to happen if these interest rates stay up here? And it happens so quickly, the market really hasn't had a chance to adjust. It's not like, this is going to go through a period of adjustment. We're there. And now we've got to refinance. We've got to do all these things next year. We've got to have a plan in place. So it poses a lot of interesting questions. Now, what I think is going to happen, just similar to what happened back in 2008, I used to call 2008 the largest private property grab that nobody paid attention to. Because before 2008, you had a lot of private owners in commercial real estate across the United States. But after the Dodd-Frank bill came out, suddenly it was all institutional. And part of that is because institutions can borrow money on the bond market. And right now, the government debt has been downgraded. Nobody wants it. You've seen the treasury auctions, right? They're a mess. So people are still buying AAA corporate bonds because those are good bonds to own. So a lot of these guys who have these monstrosity farming operations like Gates and, a lot of them, they have this debt that is rated within, the corporate markets, and they can sell bonds for a significant less amount on a guaranteed return than they can sell their other than they could finance for. Why go to a bank and borrow money at a higher interest rate when you can sell bonds, when you can sell stocks? So what I think you're going to see here in the next couple of years is the farms get even bigger, right? They're going to get even bigger because what's going to happen is it's going to be hard for the independent private owners to hold on to what they have without selling into these larger corporations that can finance the operations, that can finance everything going on. And we may see more situations spring up, like what you've seen in the chicken industry and stuff, where the farmer is on the land as an operative and is invested in it, but a lot of the overhead, a lot of the things are supplied to them and they're told what to do by the larger corporations. You could see some of that spring up. You've already seen a lot of it within the grain industry, but I think ultimately what you're going to see is a massive transfer of value of land and farming operations to these larger corporations that have an alternative means of funding. And that's the reality that we're facing. And it's a fascinating reality when you think about some of the other things that we've talked about on this channel over the past several years. It really gets you to thinking.
What do you think it is that they're protesting? Are they protesting that the environmental regulations, or does it go a lot deeper than that?
It goes much deeper than that. They're protesting an effort to destroy their farms, to destroy their livelihoods. Many of these farms have been in their families for hundreds of years, right? Holland is an ancient nation, and many of these farms have been passed down from generation to generation. Great grandpa started the farm, in the 1600s and just kept passing it along through the generations. And now suddenly the government wakes up and says, well, we got to comply with EU and UN decrees and regulations and agreements. So we're going to have to shut you guys down. And they've been actually remarkably transparent about the fact that they intend to shut down farms. They're actually calling already for the expropriation of certain farms. They're calling for using taxpayer money to take farms from farmers. And with these nitrogen regulations, ammonia regulations, emissions regulations, they're going to bankrupt a huge swath of Dutch agriculture. And that, of course, is the plan. What's interesting about Holland is that the politicians have at least been a little bit more honest about what they're doing. Most of the efforts to destroy farmers that are happening around the world in coordinated fashion through UN, World Economic Forum, and these regional governments that they're building like the EU. The politicians haven't outright come out and said, yeah, we're going to shut down farms. We're going to destroy farmers. We're going to expropriate lands. In most cases, oh, it's just a regulation. Oh, we're just trying to preserve the environment. But in Holland, we really saw what the end game was, and that is to shut down, especially small family farms, right? Some of the big corporate, giant mechanized industrial farms, those will probably be allowed to survive at least for a while longer. But in Holland, they actually have this crazy plan where they really want to get rid of agriculture and turn the entire nation of Holland and even into Belgium and parts of France and Germany and Luxembourg into this giant metropolis that would be connected by super fast trains and stuff. And some of the politicians have said, they've actually put this down on paper that, well, we got to have more space to build houses because we're bringing in all these people from Africa, the Middle East and stuff. We need places to put them. And so we can't have all these people taking up the space with cows and tulips. We need space to build this affordable housing for all these immigrants that we're bringing in here. So what's happening in Holland, I think, is Holland is kind of the canary in the coal mine, right? After the United States, it's the second largest exporter of agricultural products by value. Even though it's such a tiny nation, they export a huge amount of meat, dairy, cheese, tulips. So the value of their agricultural exports is enormous. And of course, Dutch farmers are, if not the most productive in the world, certainly up there, right? Along with American farmers and South African farmers, the Boers. They're trying to destroy them. And again, what's happening in Holland is happening in other places. It's just Holland is kind of the tip of the iceberg where you really see where this is going if we don't get control of it.
You mentioned that, the Holland politicians are being open about it and a lot of others aren't. I kind of feel like they actually are putting the information out there. It's just we're all in denial about it. Like you could read this stuff and I can't tell you. I've actually sent documents to people, and they thought, the World Economic Forum was a fake website because they couldn't believe that somebody would actually think that. But could you talk real quick about the Vancouver? See, what was it? The Vancouver Accord,
the Vancouver Declaration.
Yeah.
So the United Nations has been on this sustainability mission for about 50 years now. There's hundreds of different definitions for sustainability. But early on, while they were trying to define what it is, they decided they wanted it, but they didn't quite have a definition for it. So they started having these meetings. And in the 1970s, they actually met in Vancouver, the Habitat 1 conference under the guidance of the UN Environment Program and others. And they put out the Vancouver Declaration. And it was one of the earliest documents on this concept of sustainability. And what they said in there in very, very plain English, it's not one of those things where you have to read between the lines. They said that private land ownership is an instrument of wealth accumulation. Therefore, it contributes to social injustice. And therefore, they said, public control of land use is indispensable, was the word they used. In other words, it is absolutely essential that the government end up controlling land rather than private individuals, private farms, private owners. And of course, that's not a new concept. We saw the Soviet Union try to implement that. We're watching China implement that right now, right? They're going around and they're wiping entire villages off the map and herding these poor peasants that have been on the land for hundreds of years. They're herding them into these mega cities that they're building. So we've seen what collective ownership of land does. It produces famine. Produces rapid land degradation, right? This is just very simple economics. The tragedy of the commons. If everybody owns something, the resource gets depleted very, very rapidly because everybody just sucks out as much value as they can, as quickly as they can, knowing that other people will suck it out if you don't do it. So this is a recipe for disaster. And yet the UN says this is going to help us save the environment. It's also, again, quite ironic because we can see the effects of this around the world. If you want to see the countries with the best environment, the cleanest environment, you look at the countries with the strongest private property rights, the most economic freedom. And I go through this with my economic students, right? The United States, Switzerland, New Zealand, Australia, Japan. These are some of the nations with the cleanest environment, right? These are nations where the rivers are clean, the lakes are clean, the oceans are clean, the land is not totally degraded. Then you go to the nations that have collective ownership of land, collective ownership of the means of production. Thinking the former Soviet Union, right? The Stan countries, Uzbekistan. Some of these nations are totally ruined. You go to China, there are days where you can't even go out of your house because the air pollution is so thick and so nasty. So if these people were really interested in preserving the environment, they'd say, well, hey, we need to really strongly protect private property rights. We need to make sure that these people have economic freedom. Instead, we see just the opposite. So I think that would lead any sensible person to conclude that this is not about protecting the environment. This is not about ensuring clean air and clean water and good soil. This is a very different agenda, and I think it's clear it's nefarious.
So anyway, tell me what you think about that down below. It's a fascinating scenario. Do you think your grandkids, do you think your kids are going to have to do with less? And how do you think that all of this is going to impact the future of private businesses in general? And obviously, from what I was just talking about with the ag sector, your food, your availability to food, your choice to choose where your food comes from. That's a very big thing to me, is having the choice to choose who I buy my meat from, who I buy certain things from. I like having that choice, but the more we turn it into and consolidate into these mega farms, the less choices we have.